So what kind of a market do you want to be buying property in? There are some markets across the country that are very cyclical. Markets that come to mind might be Phoenix, Arizona, might be Las Vegas. These markets have traditionally been very cyclical. They go in booms and busts, both in multifamily, single family, and on an economic level. And that's going to be a certain type of owner who wants to be in those markets. You want to hopefully time it right where you can buy at the low and sell into the high. But that's very easy to do. Just like in the stock markets, it's very difficult to time the market, and most professional investors from Warren Buffett on down will tell you don't try to time the market, just dollar cost average into an S&P. The same approach here is sometimes these high flying markets and then low sinking markets can be very difficult to own property in. If imagine a cycle where wherever you bought it at, high or low, but at the point where your loan comes due, it happens to be a low, you could be in some trouble there. So there are other markets that are much more stable. They might not be as sexy. That's the word I'm thinking about. So I don't know, Huntsville, Alabama, Memphis, Tennessee, Nashville, Tennessee. Certain markets within Texas or Florida that, and I don't mean South Florida, which you read about in the news all the time, but more stable markets that might be in Northern Florida. And again, throughout the Midwest, not really places you're going to get a lot of rent growth. You're not going to be able to push your rents every year aggressively and get these huge returns that you're promising your investors, but you'll be able to sleep really well at night. You're going to buy these properties that are going to be very stable in their occupancy, and that's really the one thing you'll be looking at. It would be a different business plan. You're going to look at these perennial markets with very stable cash flows and very stable economic conditions, and you're going to look for that durable rent flow. What I mean by that is you're going to look to make sure that you believe and have confidence that the fact that, Columbus, Ohio has been a very stable market for the last 15 years, that's going to continue. So you're going to want to read some economic reports. You're going to want to talk to the municipality. You're going to see what's going on with the population growth, with the economic growth. What are the business plans of that municipality for the next 5, 10 years or longer? You're going to find as you get into real estate and you begin speaking to these different municipalities at small, regional, and even larger areas, that some of these cities and towns have very strong economic growth departments and have very strong business plans for how they're going to grow their economic base, and other cities and towns don't. And you're going to make a decision based on that, kind of on what areas you want to be in. So, for example, Tampa always comes to mind. Tampa got decimated, got destroyed in 2008. We had a lot of property in Tampa, I know firsthand, and we took a beating. We eventually came back, but it took many years till we got the values and had a great successful exit of the property that we had in Tampa. But after 08, 9, and 10, Tampa realized that they needed to diversify their economic base. And they came out with a new economic business plan, and they worked very hard to add different industries to their economic base. So it wasn't just import, export, and tourism. It was now several other industries, including high tech. The Route 10, not the Route 10, the Route 80, I think it's 80, between Tampa and Orlando, going up to Daytona and Jacksonville. That route has become a high tech corridor a little bit. And now with Blue Origin and SpaceX in Cape Canaveral, you have this corridor between Tampa going through Orlando and then going over to Cape Canaveral. It's almost a straight line if you look at Florida. You have this technology core that is developing. That was part of a deliberate plan by the municipality to expand their economic base and to grow. So that helps you as an owner-operator think of what markets you want to be in. The considerations would be, do I want to be in a market that's kind of very cyclical, and I'm going to hopefully benefit from that high-flying, sexy market when it hits the top? Or do I want to be in a market that's more perennially stable and durable? And you might say, I'm going to be able to deliver, high income, durable cash flow streams to my investors consistently, but those cash flow streams might be at an 8, 9% cash on cash return, rather than a 13, 14, 15% cash on cash return. At some point, it all comes down to the cost of capital, both your cost of debt and your cost of equity, and your access to both, right? Do you have access to capital? And what's the cost of that capital? That's often going to drive what kind of property you're able to buy and what kind of, that comes down to the investors. Unfortunately, I just can't get away from it. Real estate is so very capital intensive that so much of what you're going to be able to do and succeed within real estate, you're going to be dependent on your access to capital, your ability to raise capital, and your what those investors are going to demand as your pound of flesh to take their money. So hope that helps. If you want to talk about this in more depth, and this is obviously one of the more confusing and more important factors in real estate, not just what markets you want to be in and what you want to look for in those markets, but also what we touched on at the end here, the cost of capital that you have is going to drive a lot of your decision making. If you're interested in speaking more about that, please direct message me in the comments. You can also see links down below in the description for different ways to access me and my team. Speak to you soon. Thank you.